it's your tax BFF here, and I want to let you know something. Are you hiring the right type of people? 1099s or W-2s? Let's get into this video. So I got a few new followers, a bunch of DMs. You guys have kind of been a little bit into this little series. So this will be the finale on our 8 p.m. Wednesdays, but I'm going to make it a good one for you. And I promise to be back for some lunchtime talks throughout the tax season. So we just wait on a few more people to jump in. We'll get started right at 8. I'm a very timely person. I believe in, just really respecting that you guys showed up for me when I've been telling y'all for weeks, 8 o'clock. So I appreciate you, and I definitely want to make this efficient for us. To all of my new followers, one thing that I just want you to know and want you to leave with is that I am a tax expert. I focus on small businesses, growing, developing, and making sure that their tax liability is as low as possible so that they can scale and grow in the future. My bread and butter is definitely individual and small business tax preparation. However, I do offer full service accounting year round, as well as a coaching program for entrepreneurs who are making somewhere between $30,000 and $100,000 and just trying to do everything in-house, trying to really figure out and hone in on their accounting, trying to understand what it means to grow and scale, and also just having a general understanding of everything before they start to hire out for an accountant, for an attorney, for all of these different things that they will need in their business. So welcome. Today, we're going to be talking about the employees versus contractors. It's one of the most controversial topics and deductions in a small business, and it's something that everybody tries to get around at some point in business. I believe that you are not a full-time entrepreneur, businessman or woman until you have hired and scaled. I do not believe that you are a real boss until you actually have some employees under your belt. So, of course, I am going to speak to why I think you should hire, but also what that means and how to keep track of it. The number one reason that I even started this series was because the IRS is out to get small businesses. They are projecting that 80% of the IRS's revenue is and will come from small businesses that are making less than $200,000. That's the majority of my followers for sure, and the vast majority of my small business clients. So I want to make sure that we are getting our documents in order, our record keeping is tight, and we are prepared to summarize and give whatever we need to the IRS at any given time. And I do not want you to fall victim to the, I didn't know, or I didn't know I couldn't do that, or I thought, because it is one of the least acceptable responses that the IRS will receive from a person. I actually believe that once they hear you say, I didn't know I could do that, they say, cha-ching. We got us one. So stay educated, continuously look for knowledge and deductions and ways to reduce your tax liability legally, and then let's get our paperwork together. So employees versus contractor. The first thing I want you to know is the easiest way to distinguish between the two. An employee has a set schedule, has a set pay, has to report to you and hone in on all of your roles and responsibilities for them. They are contingent upon doing good by you, right? And I said that because I want to touch on everything. I want it to be as broad as possible. An employee is anybody that has to directly report to you on any type of regularity. So anybody that you're paying a set salary to, that has a 9 to 5 with your business, that is doing the same type of work on a regular basis, they are employees and you should be paying some employment taxes on them. Contractors. These are the project basis individuals, the companies that you hire to help you and support you on one piece of your services or product for your clients. These are people that pick and choose when they want to work with you. You hire them to fulfill one piece of the puzzle. They are not taking on any of your clients in totality. They are not answering to your culture and your code of ethics within how your business operates. They are just getting a job done for you. Okay? Both of these are extremely important because once we put on your tax return that you have paid individuals as employees and or contractors, the IRS is waiting to see some W-2s and some 1099s on that person's behalf. Because you're deducting it from your tax liability. They want to know, well, who's supposed to be paying the taxes on this? And if you do have contractors, you don't want to just say, oh, I'm keeping track of how many Cash App payments I sent to them, and that's going to be proof. Or I make sure that I Zelle all of my contractors, so I'll always have my Zelle records. No. At the end of the year, you are supposed to be submitting 1099 NEC forms for those individuals, and they are supposed to be reporting that on their tax returns. Now, in the event that you think that you're about to save some money on employment taxes by keeping them contractors and not having to pay that extra 15.3% on them, and you're just going to have contractors forever. Been there, done that, okay? In the event that they determine that your payments look too regular, or your payments are all the same amount, or you've been dealing with these people for the same too long of a time period, or they determine that for any reason that those were employees, baby, those penalties can take you out of business. Not only would they switch all of those contractors to employees, make you pay those employment taxes, but there's also penalties for late filing each quarter or monthly, depending on how much you have in payroll of taxes. Those penalties can take you out of business. The amount of money that you would spend in employment taxes will be minimal compared to what it would look like if they backdate and pull everything and say, these have been employees, you owe us all these employment taxes, and here are the penalties for late filing and failure to file timely on-time returns for your employment taxes. Don't do it. So going back to this employee versus contractor, in the beginning stages of business, and I'm talking about the individuals who are, grossing less than $20,000 in sales. So you're still trying to figure it out. It's still kind of a side hustle. You have someone that is potentially helping you, but not really having a standing relationship with your business because you really don't have the income to sustain them quite yet. I do not tell you to jump into any type of specific business entity. I do not tell you to jump into any type of relationship with any bank. And I definitely don't tell you to jump into any type of relationship with an employee status, because not only are you paying those employment taxes for them, in Michigan alone, you still have to pay unemployment on that first $7,000 at a certain percentage, and then it goes down from there. They then can file unemployment if you fire them and have to let them go. It's so much involved with employees that I do not suggest jumping into that relationship on the front end of your business. Now, for you individuals who are making that $30,000 to $100,000, you're trying to double yourself. You're trying to double the productivity of yourself by hiring a counterpart, hiring admin to give you more free time to do things for your clients. You're hiring someone who just kind of goes through your emails and sorts things out, or sets your schedule, or helps you out with your social media, anything like that. It's time to make sure that you determine if this is in fact a company employee or a contractor that is just lending their services on an as-needed basis. It is so, so important. So FICA, employment taxes, self-employment taxes, SE tax, all of those are the same thing. you are paying into your Medicare and Social Security, and it's roughly 15.3% of that amount that is paid out. Here's the difference. If you are an LLC, your net profit, meaning all of your gross sales minus all of your deductions, your expenses for the business, that net profit, no matter what it is, you are paying SE tax or an employment tax on it. It does not make sense for an LLC to put their owner on payroll. If you're essentially the sole proprietor, the only person that's working in your business, it does not make sense for you to be a W-2 employee of your LLC. Because then you're paying employment taxes, but you're deducting it from your employment taxes, but then you go pay it again on any net profit in the business. It's ridiculous. Go ahead, take an owner's withdrawal and just transfer money to yourself as needed. Now, if you're in service-based, I say that should be at least 30% of your income. If you are in product, sometimes it can be a little less. But if you are just transferring 30% of your net profit or your gross profit to yourself as the business owner, you're fine. Because anything that you don't deduct anyways is going to be taxed. Now, S-Corps. I love S-Corp election. On LLCs, you can have your LLC and you can get the S-Corp election. So you're just saying, IRS, I want to be treated as a corporation. I am an LLC, a limited liability company, but I want to be treated as a corporation in the eyes of taxes. This election allows you to W-2, you, the owner, pay yourself on a reasonable compensation or a reasonable wage for the IRS, pay employment taxes only on that amount, then deduct your wage and your employment taxes prior to assessing any net profit. So prior to assessing any additional tax on that business, you get to pay yourself already. And then you're only paying employment taxes for the amount of money that you actually were compensated. So any additional pros that you want to keep in a company so that you can invest in the next year, or so that you have some cushion, or so that you are, saving up to get a new building or to hire a new employee, you don't pay employment taxes on that money. As an LLC, you do. So one of the biggest distinctions is a lot of people are saying, well, how do I pay myself? How do I put myself on payroll? And it really is determined by your business entity. How are you set up? Are you set up as a sole proprietorship? Are you set up as an LLC? Do you have a partnership? Or are you an S or C Corp? C Corp, I've been seeing a lot of information that is just like cringeworthy. C Corps are taxed twice. Don't get it twisted. You pay your corporate taxes on your corporation in return, and then you receive a Schedule K-1 just like an S Corp, and then you pay taxes on it again from the net on your business. It does not make sense for people, especially individuals, where you're the sole shareholder. You're the only owner. Now, if you have, at least 10 shareholders in that company, and you are paying out some dividends from the company in addition to wages, or you have varying amounts of interest in the business. So I own 2%, you own 10%, they own 50%. Then C corporations can have some benefits and some ways that you can reduce your tax liability. However, for the most part, many of us are the sole shareholder or one of two. Okay, you got one or two shareholders. There's no reason to be taxed twice on that money. Now, here we go. Income taxes. All of this goes into your tax bracket. Corporate tax rate is at 21% right now. You're at 24%, just a little over $40,000. So if your business is netting $40,000 or more, you could save yourself right off the bat 3% in taxes just by being an S corporation. And then you get to reduce your tax liability by the amount that you pay yourself, the employment taxes you pay on your behalf, your medical insurance that you pay on your behalf, your IRA contributions that you are you as the employee are contributing on your behalf, you get to pay all of that, reduce your tax liability, and then pay taxes on that. You listen, I don't know why so many people still need convincing of switching. There are more filing deadlines. There are larger penalties. So I do suggest that you are on top of your stuff. However, I am never about paying more in taxes, especially when a simple election could switch my whole game around. Okay. Can't leave this one out. This is one of the best deductions. Paying your children. Paying your children. You can pay them up to $12,000 each year. Now, this is a huge deduction. You do have to pay employment taxes on them just like any other employee that you have. So don't get that twisted. They do not have to file that $12,000 on their taxes. Huge benefit to the family. But in the event that you are doing this, a couple things that you want to keep in mind. You want to have some type of timesheet or at least some type of accountability of how many hours they worked on what days. You want to have a list of responsibilities. And guys, we are in the social media age. Post that video. Post that video, get them to take a picture doing whatever you say they do. Have them post a video talking about their roles and responsibilities. Let's get IRS all the receipts they need. Here's your picture, your video, your timesheet, and all of the direct deposits into their account, period. Okay. So now, even if you're just allowing that child to pay for their own, fast food or their own ice cream or their own shoes or something like that. Listen, do it out of the money that you are deducting from your business and reducing your tax liability by, and you're still teaching them how to manage their money. You're teaching them how to be held accountable for roles and responsibilities. You are making sure that they understand the concept of money. You run out of that $12,000, my baby, you're done. Ain't no Disney World. So a ton of real life experience comes from that, and it reduces your tax liability. They're not taxable on their end. Two things to remember. This is for children that are 18 and under. Once they become 18, they're real employees. And they do have to be at a reasonable age to carry out the responsibilities that you are saying they have. For instance, I was talking to a client earlier who has 5-year-old, and they said that the 5-year-old helps shred paper. Right. They probably can. That sounds like they can do that. But you got $12,000 worth of paper to shred? Because if you do, I would like to have it as a side hustle. Okay. I would like to make that money real quick. So just make sure it makes sense. A ton of your children, mine included, are just better at this social media thing than we ever will be because they grew up on it. They understand it. They live on it. It's their life. Saying that they are your content creator, saying they are helping you with posts, anything surrounding this life of theirs in social media, that is viable. But making sure that you have some type of an account of how many hours they spend doing it, how you paid them, showing that they had to show up or submit something to you showing that they completed their task. Something like that is very necessary in order to say that your kid was working for you. You can't just be like, well, I know I got $12,000 deduction and I got 3 kids, so IRS, they got my $36,000. It doesn't work like that. Now, essentially, that's what you're doing, but you must back it up. So all of these things, especially with going back to the employee versus contractor, this is a contractor, they are not, set up for anything in particular. They are only working on a project basis, X, Y, and Z, document it. Make sure that you have them sign their employment documents as a contractor. Make sure that they know that they can, what their hours or expectations and your expectations of them and their expectations of you are. Outline it completely. But look at the language. Go to irs.gov and see what it says for 1099 NEC. what it says underneath contractor. Use that exact language in your language when you're filling out those employment documents. If not, they can find any reason possible why that's an employee and switch it all up on you. This could terribly hurt your business and your pockets. It's something that you do not want to do. So, recap really quickly. Know if you have an employee or not. If they have set hours, if they have a set salary, if they have set days that they work, doing the same stuff. If they have to report to you as their manager, they're an employee. Pay those employment taxes, get compliant. If they are project basis, they run their own thing, they work when they feel like it, you send them a template of whatever projects you need to be done and they pick and choose which ones they do, then they are a contractor. One thing you need to know about contractors and employees is that if they see that deduction on your tax return, they are expecting your business to submit 1099 NEC forms and W-2 forms for those individuals and or businesses. That deduction is something that needs to be substantiated. So yeah, you can have your supplies on there and then you only have to show receipts or documentation in the event that you're asked. But when you have wages, contract employment, anything in that realm, they are expecting to see some type of documentation filed with them by the beginning of next year. So at the end of the year, start getting all your things in order right now. They are expecting to see that to substantiate that deduction. Meaning, if you're going to be reducing your tax liability by this amount that you pay somebody, they are expecting that person to have to pay them some taxes. Somebody is going to pay taxes on this money. Get your stuff in order. If you have any contractors that you know you've paid, a minimum of $400, $600 to throughout the year, you want to have a W-9 filled out for them with their name, social security number, and address, or their business name, EIN, and address. You want to be able to produce a 1099 NEC for every single one of those people. Period. W-2 employees, you want to make sure that you have a W-3 filled in. You want to make sure that if they did have exemptions, that you are accounting for that when you are making out their checks. If you're using a payroll system, at least some type of, something to calculate how much the employer is supposed to pay towards employment taxes and how much is supposed to be deducted out of their gross pay. Let's make sure that we are submitting those W-2s and we're submitting all of our W-3 information to the IRS. So they fill out W-4s and W-9s. You submit 1099 NECs, W-2s, and W-3s to the IRS. This is the only way to substantiate this deduction. So right now, if you're already thinking like, oh my God, I have not gotten these people to sign these documents, track them down right now. Hey, forgot. Can you fill this out? It's so hard to get people to fill out those W-9s on the back end, especially during tax season, because a lot of people who are making money from here, there, and everywhere, they're filing their taxes early so they can get a tax refund. They don't got time for you to be showing them no more income. Okay, ma'am, that I ain't work for you, and now it's your word against theirs. Okay, you can definitely, of course, in some ways to say they refuse to submit their... So your tax BFF was having technical difficulties, but I was dropping gems. If you are a business owner and you have paid anybody $600 or more, you need to be sending them 1099s. It's as simple as that. 1, those 1099s need to be sent out by January 31st. 2, this is the only and most important way to substantiate those deductions on your return. So in the event of an audit, if they say, hey, you pay such and such, but we didn't see a 1099, they can wipe that entire deduction away and have you paying taxes on that money. But you paid it to such and such. And 3, don't mess up when it comes to 1099 contractor versus W-2 employee. See one of my other videos for that knowledge. But let's stick to it. Send those 1099s out.